Good morning, everyone. I will have the committee come to order now. I wanted to thank everyone for joining us this morning. I want to especially thank the witnesses for being here today. On this subcommittee, our primary focus is ensuring that America's small businesses and entrepreneurs have access to the capital that they need to start and grow their businesses and create good-paying jobs. Unfortunately, many entrepreneurs, particularly from traditionally underserved communities, lack the skills, training, and experience needed to demonstrate to conventional lenders that they are worth the risk. This leaves two main challenges facing entrepreneurs. First, being a lack of access to capital. The second being the skills and tools it takes to become credit-worthy. As legislators, it's incumbent upon us to address these challenges, and it is the reason that we are here today. Small Business Administration has an array of programs designed to boost access to capital and to promote entrepreneurial development. However, SBA's Microloan Program is unique in that it offers entrepreneurs both opportunities to unlock affordable capital and the technical assistance they need. Here's how it works. SBA lends qualified nonprofit intermediary lenders money these intermediaries then use to make their microloans to small businesses and entrepreneurs. SBA also provides the intermediaries with grant funding to offer marketing, management, and technical assistance to borrowers and potential borrowers. In many cases, intermediaries begin by providing technical assistance to a potential borrower to enhance their credit readiness prior to making a microloan to the entrepreneur. That program began as a pilot program in 1991, and following a successful start was made permanent in 1997. 2018 was a record year for the Microloan Program, and the program is currently 3.5% ahead of where it was at this point last year. Last year in my home state of New Jersey, 150 microloans totaling approximately $2.5 million were approved. Since then, it has grown considerably, and many intermediaries report that some of the program's original rules are now restricting them from meeting existing demands for small business financing and providing more technical assistance. In other words, they feel the program has outgrown many of those rules and have expressed the need for Congress to review some of those rules in order to enhance flexibilities for intermediaries. That brings me to why we are here today. I look forward to hearing the recommendations and feedback of our distinguished witnesses to continue strengthening the microloan program. Doing so will allow us to provide intermediaries with appropriate flexibility to enable them to continue offering affordable capital and essential technical assistance to America's smallest businesses. I hope today's hearing will be a productive opportunity to explore the ways Congress can continue modernizing and optimizing SBA's microloan program. And now I'd like to yield to the ranking member, Mr. Hearn, for an opening statement.
Thank you, Mr. Chairman. Although the country continues to record above-average economic marks, the nation's smallest firms still face challenges when it comes to financing their businesses. This is even more pronounced for the category of small businesses known as micro-businesses. Recognizing the difficulties the nation's smallest firms face, Congress sought to alleviate the capital access issue with the creation of the Small Business Administration's Microloan Program in 1991. And after a brief trial period, Congress made the loans permanent in 1997. And the Microloan Program has been assisting entrepreneurs ever since. Unique to the program is the financial transaction that includes SBA making a direct loan to microloan intermediary or a nonprofit that is working within the program. From there, the intermediary provides loans directly to the small businesses in need. Importantly, these small businesses are not left by themselves to fight for their survival. Built into the program is the requirement of technical assistance or counseling by the intermediary. This program is what we are going to be discussing today. Last year, members of this committee were able to enact a number of reforms to the microloan program. Included in the legislation were two important studies. First, SBA is required to study the utilization levels of the program by micro-lenders. Second, the Government Accountability Office is required to examine SBA's microloan oversight capabilities. With any government program, it is critical to have comprehensive oversight to safeguard American taxpayer dollars. As we eagerly await both reports, which are due to Congress this August, I look forward to today's hearing that will review the program from the perspective of you, the participants and the witnesses, directly involved on the ground. SBA's capital access programs are transforming neighborhoods and communities from my home state of Oklahoma to Florida and beyond. Following in last year's footsteps, we must continue to create an environment where small businesses are able to grow, expand, and create jobs. As the hearing title implies, these companies may be small, but they have an outsized effect on our economy. Thank you, Mr. Chairman, and I yield back.
Thank you, Mr. Hearn. The gentleman yields back. If committee members have an opening statement prepared, we would ask that they be submitted for the record. I would just like to take a minute to explain the timing rules. Each witness gets 5 minutes to testify, and each member gets 5 minutes for questioning. There is a lighting system to assist you. The green light will be on when you begin, and the yellow light will come on when you have 1 minute remaining, and the red light will come on when you are out of time. And we ask that you stay within the time frames to the best of your abilities. I would now like to introduce our witnesses. Our first witness is Ms. Seale Prinster. Ms. Prinster is President and CEO of Colorado Enterprise Fund, a position she has served in for over 30 years. Her current service roles include trustee of the Denver Foundation and chair of its Impact Investing Committee, board and executive committee member of the National CDFI Coalition, and board member of the Other Side Academy. She previously served as trustee for the University of Notre Dame and president of its Alumni Association, and was a founding member of the Denver Sustainable Food Policy Council. Her awards include the 2018 David E. Bailey Small Business Advocate Award from the Denver Metro Chamber, Outstanding Woman in Business from the Denver Business Journal, and the Financial Services Advocate of the Year from the SBA. The Tom Dooley Award from the University of Notre Dame. Ms. Prinster is a graduate of, you guessed it, University of Notre Dame. Welcome, Ms. Prinster. We're lucky to have you today. Our second witness, I'll continue on and then I'll get back to you. Our second witness is Ms. Karolina Martinez. Mrs. Martinez is the CEO of Cameo, the California Association for Micro Enterprise Opportunity, a statewide association that represents over 220 lenders, training programs, job creators, agencies, and individuals dedicated to furthering micro business development in California. Mrs. Martinez has over 13 years of experience working in the economic development and business consulting with a variety of nonprofit organizations and universities across the Western Hemisphere. She has developed bilingual, culturally appropriate entrepreneurial training programs, trained and coached pre-venture and startups, developed international networks promoting partnerships among private corporations, provided consulting services to vulnerable communities, and has owned her own business consulting firm. She is a graduate of the University of the Andes in Bogota, Colombia, and received her Master's of Business Administration from the University of North Barranquilla, Colombia. Welcome, Mrs. Martinez. Our third witness today is Ms. Mariama Jallo. Ms. Jallo is the owner of the Mariama Beauty Supply in Portland, Maine. Mariama went to school in Gambia, a country in West Africa, and grew up helping her mother manage the family grocery store. Because of that experience, she knew she wanted to open her own business someday. She arrived in the United States in 2012 from the Gambia. Her dream of opening a business came true in Maine, where she operates and continues to expand her business. Welcome, Ms. Jallo. I would now like to yield to our ranking member, Mr. Hearn, to introduce our final witness.
Our witness is Michelle Richards. Ms. Richards is the executive director and a founding board member of the Great Lakes Women's Business Council outside of Detroit, Michigan. She was a pioneer in the micro-lending movement and has been a microloan intermediary with the Small Business Administration for over 2 decades. Her organization has helped countless startups, entrepreneurs, and small businesses with financial assistance and counseling. She is also a previous winner of SBA's Women's Business Advocate of the Year Award for the state of Michigan. Ms. Richards is testifying today on behalf of Women Impacting Public Policy. Thank you.
Thank you very much. Welcome. We're going to start with Ms. Prinster. Over to you. You were recognized for 5 minutes.
Good morning. Thank you. I'm here today to suggest some improvements to the SBA Microloan Program, but first I will tell you a little bit about my organization and myself. I have served as President and CEO of Colorado Enterprise Fund, or CEF, for over 30 years, starting as its first employee. We were founded in 1976 as a nonprofit providing loans to disadvantaged small businesses. We are certified both as a community development financial institution and an SBA microloan intermediary. Overall, we have made over $81 million in loans to more than 2,400 businesses in Colorado and have created or maintained over 12,000 jobs. These loans have helped businesses that could not obtain the capital they needed to start or grow from traditional banks. CEF started with the Microloan Program in 1992 when the program first began. We have received 15 rounds of program loans totaling $11.5 million, with 11 of our loans now paid off. With Microloan Program funding, we have made 1,500 small business loans totaling $18.7 million. A significant percentage of our loans, 85%, have been made to minority, women, veteran, or low-income entrepreneurs. The microloan TA grants have helped us create and administer a robust program of business advising, coaching, and training using in-house consultants, lending staff, and a pool of outside legal and accounting professionals, all trained to provide trusted guidance to our clients. We deliver an average of over 3,000 hours of technical assistance per year, and over 80% of our borrowers utilize our TA services. I have led CEF for the entire time since we began in the microloan program 27 years ago and have been a member for many years of the Friends of SBA Microloan Program, an informal network of microloan intermediaries. I also serve as a board member of the National CDFI Coalition, representing microlenders within the broader CDFI community. With this experience, I'm confident that I speak for a consensus of other microlenders to say that as good as the program has been for businesses in Colorado and across the nation, it could be even better. There are two changes I suggest to the program that would reduce administrative burden on both the nonprofit intermediaries and the SBA to help microlenders better support small businesses seeking credit. The first improvement is elimination of the 155th rule, which affects intermediaries' ability to get loan capital from the program. This rule was part of the early pilot phase of the program and limits the distribution of loan funds for the first half of each year to the lesser of $800,000 or 155th of the new funds appropriated. In some years, the maximum capital available gets capped at about $350,000, which will only fund a handful of small business loans. Having to wait for additional loan funds until the third or fourth quarter of the year creates an administrative bottleneck for the agency and undue cash restrictions and paperwork for the intermediaries. Elimination of this rule will allow SBA to more efficiently get loan capital to the microlenders where and when the funds are needed and help intermediaries fund their pipeline in a timely way. The second improvement is elimination of the 50-50 rule, which also is a burdensome rule enacted in the pilot phase of the program and affects the administration of our TA grants. It limits funds for pre-loan support to 50% of the grant amount. Microlenders support many startups needing intensive business counseling. We cultivate our borrowers by helping them with training and counseling to become ready for credit and debt. This rule also limits funding for underwriting, which is a costly challenge when working with startups and non-bankable borrowers. Elimination of this 50-50 rule would enable microlenders, many of which are very seasoned in this work, to determine the best use of their grants to support their market. They would be able to provide the needed upfront assistance to help the entrepreneur build a solid base for their startup, in addition to the post-loan assistance to support the ongoing growth of the business. We are very grateful for the support of this committee for the very impactful SBA Microloan Program, and hope you will consider elimination of these two rules, which would greatly improve it. Thank you.
Thank you so much for sharing that. I wanted to move it on to Ms. Martinez. Over to you for 5 minutes.
Turkim and Ranking members of the subcommittee, my name is Karolina Martinez, and I appreciate the opportunity to testify on behalf of the California Association for Microenterprise Opportunity, CAMEO. CAMEO is California's statewide microbusiness network of over 220 organizations, agencies, and individuals that provide entrepreneurs with loans, credits, and business technical assistance. Annually, CAMEO members served about 21,000 businesses. These firms, largely startups with less than 5 employees, support or create 37,000 new jobs in California and generate a total of $1.5 billion in economic activity. Congressional investment in microbusiness development matters. Business ownership increases income and generates wealth in both urban and rural underserved communities. Business coaching and capital are critical tools for success. Thus, the SBA Microloan Program is of great importance to CAMEO and our members. Historically, small businesses have struggled to obtain access to sufficient capital and credit to enable them to lead job growth. The struggle can be even greater for startup and micro businesses. Take, for example, Maria Palacio. She is a fifth-generation Colombian coffee farmer who started her U.S.-based coffee roasting business to help coffee farmers get a fair price. Maria secured a contract with Facebook, but needed a loan to purchase the beans to fulfill the contract. Since Maria's company, Progeny Coffee, was a startup, banks could not make that loan. Maria turned to Working Solutions, a CAMEO member who lent her $25,000 with SBA funds to help her purchase inventory at this critical moment. Working Solutions helped Maria manage her exponential growth. Over the last 3 years, Progeny grew from $10,000 in revenue to over $1 million in revenue. To address challenges faced by small business owners such as Maria, Congress authorized the SBA Microloan Program as a 5-year pilot program in 1991 and made it permanent in 1997. The rules of the program have remained basically the same, while the lending landscape has dramatically changed. Congress has moved to modernize this program, most recently modifying the 2575 rule to 50/50. While this was helpful, CAMEO offers the following 4 suggestions to further modernize the program. First, eliminate the 50/50 rule. The Microloan Technical Assistance Program previously required that 25% of the technical assistance given to the entrepreneur by the lender be provided pre-loan and 75% post-loan. In 2018, the Congress changed these percentages from 25/75 to 50/50. While the relaxed requirement is a welcome change, the microloan industry has long advocated for this percentage to be lifted altogether, as every business is unique. Second, amend the 155th requirement to provide greater flexibility. This rule is a leftover requirement from the pilot program and is not an efficient way to distribute funds. We too support the elimination of the 155th rule. Additionally, we would support the flexibility of having a reserved fund for SBA to deploy capital throughout the year in the event of a lapse in appropriations that results in a continuing resolution. Third, provide access to microloan data. SBA should make available publicly data on borrowers who use the microloan program, similar to the data available for the 7A program. Supporters of the program would benefit from having information such as geographical location, loan amount, interest rate, terms, etc. Requiring individuals to file a Freedom of Information Act request is burdensome. Fourth, increase support for microloan funding. We appreciate this committee's history of a strong bipartisan support for this program. In 2019, SBA is expected to support around $42 million in lending to intermediaries. In addition, an appropriation of $31 million was allotted for technical assistance. CAMEO requests that this program's growth continue, and we will advocate for a 10% increase in this program. In closing, I'm compelled to mention the exponential rise of online lending. In 2015, the volume of online lenders was 5 times that of SBA lending and growing at an increasing rate. The access to fast money comes at a price, in many cases, a price too high for many small businesses. Last year, California became the first state to pass a transparency in a small business lending bill to protect entrepreneurs from predatory lending. CAMU believes that the access to capital issue has moved beyond access to affordable capital to financing that will help it to grow, not force it into bankruptcy. We support a federal truth in lending bill and would welcome this committee's inquiry into the feasibility of such a bill. Thank you for inviting me to testify here today, and I look forward to answering any questions you may have later.
Thank you for sharing that. That's all very helpful. Why don't we move on? Ms. Jallo, over to you. You're recognized for 5 minutes.
I am Mariama Jallo, owner of Mariama's Beauty Supply in Portland, Maine. I arrived in Maine from a small village where my family own and operate a local grocery store. My mother also is a leader of Women's Association where every Saturday, 40 to 50 women meet at our house to make soap. With the money earned by selling the soap at the local market, they make loans to members of their groups so that each woman can start, expand, and own their small businesses and in emergency situations. After working in Maine for about 3 years, I began to think about opening a small grocery store like the one my family owned in our village, which I had helped manage with my mother. I soon discovered that despite my business skills, owning a store here is nothing like back home. I then saw that I would need help to start any business in Maine, as the licensing, credit card, and banking systems are all different. That was when I learned about Coastal Enterprises, CEI, a community development financial institution, and then began to work with John Scribner of the Start Smart program manager. Start Smart's work with immigrants at no cost to them throughout Maine who are looking to start or expand their businesses. When it began apparent that the market for new immigrant-owned grocery stores in Portland, Maine was already saturated, I saw that there was a potential for hair and braiding business because there was nothing like that in Portland, Maine. CEI helped me at all aspects of locating and setting up my store, including permitting, record keeping, negotiating the lease, and many other details. In addition, also, CEI helped in passing legislation to allow hair braiders to work in the state without a cosmetology license, which at that time was required. John and I both testified before the state of Maine legislature in the effort to update the licensing requirements at the state level. The bill passed, and then the new regulations made it possible for me to offer hair braiding at the store without having to obtain the full cosmetology license, which has been essential to the cash flow of my business. CEI continued to support to meet the necessary requirements and obligations related to operating the business, such as bookkeeping and expansion plans that I have in fact, after Mariama's Beauty Supply had been in business for 2 years, CEI loaned me funds using the Small Business Administration, SBA Microloans. This allowed me to increase my retail stocks and to renovate my store, including full-service salon, which will employ hairstylists and makeup artists in addition to the existing hair braiders. Whenever I have questions, I call John. If it weren't CEI, where would I go for business advices? I hope and pray that CEI will be here for the next generations of people who are coming to Maine, as well as those who are already here. Just as Women's Association in my home village is making a difference in their communities, I see how CEI is having an impact on lives in Maine, including mine. Thank you so much.
Thank you so much for sharing your personal experience. It's very helpful for us to understand how this all works on the ground. We're going to move on. Ms. Richards, you're recognized for 5 minutes.
Thank you. Good morning, Chair Kim and Ranking Member Hearn, members of the committee. I'd like to thank you for the opportunity to testify. My name is Michelle Richards, and I am testifying on behalf of Women Impacting Public Policy, a national nonpartisan policy organization advocating on behalf of women entrepreneurs. I serve as the executive director of the Great Lakes Women's Business Council, which is a nonprofit that services women and minority small business owners and entrepreneurs through capital, women's business certification, training, coaching, and counseling. When I started Great Lakes WBC over 34 years ago in 1984, microlending was not an industry. We didn't know we were a microlender because nobody had yet labeled it. But when the SBA Microloan Program began, we became one of the first organizations to receive funding. We've made $7 million in microloans, creating 1,800 jobs, of which 89% were to women. Capital is often the determinant of an entrepreneur's ability to start or grow a business. There are nearly 10 million women-owned businesses in the United States, generating $1.6 trillion in revenue and employing 9 million Americans. Yet, for women, accessing capital continues to be difficult. Women account for only 16% of conventional small business loans and receive only 4% of the actual loan dollars. For entrepreneurs in rural areas, the challenge of obtaining capital is even greater. As of 2017, only 30% of community bank branches were in rural areas. 21 years ago have passed since the implementation of the very successful microloan program. It is time for Congress to modernize the microloan program. WIP supports the following three changes: amending the 155th rule to provide greater flexibility to SBA microlenders, as you've heard, eliminating the 50-50 technical assistance rule, and providing access to SBA microloan data. The 155th rule is the #1 pain point for microlenders. Under this rule, as you've heard, only $800,000 or 155th of available loan funds are made available to intermediaries. It's divided equally among states. The SBA asked for authority to eliminate this rule, stating that it restricts ability for capital for small businesses without considering the size of the state or the needs of the small business community. When the SBA is operating under a continuing resolution, loan amounts are even more restricted. We had a loan in which we requested $500,000 and had a pipeline to support it, but only received $164,000 because that was all that was available for Michigan. Our options were to take the smaller loan or forego it altogether and lose our place in the queue for the second half of the year. In another instance, we ran out of money at the end of the fiscal year but had to wait 5 months until March when funding was available. This affects our credibility and our ability to serve communities. WIP supports the elimination of the 155th rule. The microloan program has strict requirements for microlenders. The TA program for many years, as was stated, provided 25% for pre-loans and 75% for post-loans. WIP asked Congress to give microloan lenders the flexibility to use TA as they see fit, rather than set a percentage prescribed by the federal government. Many of these organizations, like ours, have more than 2 decades of experience and need the ability to shape the program to be the most effective for our clients. SBA should make available data on borrowers who use the microloan program, similar to the data that's available through the 7A program. Data on geographic location, loan amount, interest rate, and term would be helpful not only to supporters of the program, but to microlenders in determining gaps and needs. In conclusion, Great Lakes WBC is an example of how organizations, in partnership with the SBA, can serve the needs of entrepreneurs and their communities, turning them into job creators. Making the suggested changes to the microloan program would go a long way toward making the program even more impactful. Thank you for inviting me to testify here today. I look forward to answering any questions you may have.
Thank you. Well, we all appreciate everything that you've shared with us today. So why don't we move on? And we have a lot of questions for you and look forward to this conversation. I'll begin myself. I'll recognize myself for 5 minutes. Thank you again for being here. Capital access is critical. Is a critical need for small businesses. We all know that. It provides an important financial foundation which often determines whether a business is going to be able to successfully grow. Predatory lending has been a growing issue in the small business community, and unfortunately, as capital availability from traditional sources has declined, predatory practices have emerged. Predatory lending has devastated many small businesses throughout my state and certainly across the country. I wanted to start with Ms. Martinez. In your testimony, you mentioned the rapid rise of predatory online small business lending and how, in many cases, access to this fast money comes with a price much higher than most small businesses can afford. I wanted to just drill down in this because I think it's a very important point. Unfortunately, this often leads to entrepreneur insolvency and or small business bankruptcy. How often does your organization or its members encounter an entrepreneur or small business struggling with the consequences of agreeing to such a loan with predatory, unfair, or unreasonable terms?
Thank you, Chairman Kim. Yes, unfortunately, our members do encounter these cases more often than we would like to. So sometimes it is daily. And most of our borrowers are actually trying to arriving to us to try to save their businesses and save their way of life sometimes. So this predatory lending is really affecting. And one of the things that I would say probably is that they are trying to serve the clients as efficient as they can, and they're trying to use the loan capital that our members have to really help the business owners to refinance. But it is something that is coming to terms really often, and we could say that every day they are seeing these kind of cases.
Well, as you were saying, with the refinancing, since microloans may not be used to refinance existing debt, how does your organization's work with the microloan intermediaries in its network to remedy this problem for the borrowers then?
Yeah, well, Cameo is helping our members to find other alternative, not restricted loan capital to be able to use to refinance. So they are not allowed to use micro loan capital to do these kind of loans. Sometimes it's not possible and they get to us really late, but we do, and our members have to find additional capital to be able to do the refinancing and help these small businesses.
Thank you. I believe if Congress is to effectively confront this issue of predatory lending, we must have accurate and current data available as well. And I think that gets to a lot of the points you raised, Ms. Richards. In your testimony, you mentioned challenges in accessing microloan program data. Is the problem that the data around microloans is not being collected or that SBA isn't reporting it? SBA is not reporting. Would you mind using? Yep.
Sorry, technology is never my friend. SBA is not reporting it. The data is available. So
I guess from my perspective here, would it be unduly burdensome for SBA to require participating intermediaries to collect certain data and to report it to the SBA? And then obviously we need to address what you just mentioned as well about making sure SBA is going to be reporting this coming out.
So as a microlender, we report in a system that's called MPERS, Microloan Program Economic Reporting System, I suspect. And so, in fact, today is the deadline for our reporting from last month. We report all of this data every month. Mm-hmm. It is available. It is part of the database. It is not published. It's not made available.
And from what you've heard so far, I mean, what is the reasoning that you're hearing why this data has not been made available?
I am not familiar with the reason why.
Okay. Well, we will make sure we come to the bottom of that. Well, my time is coming to an end. I wanted to turn it over to Ranking Member Mr. Hearn, who's now recognized for 5 minutes.
Thank you all. Thank you for your story, Ms. Shallow, about the American dream coming here and starting with an idea and finding access to capital and realizing that you can't put people to work. So thank you so much for that story. To the entire panel, can you each briefly describe the small business environment in your local area? very briefly, the optimism. Is there optimism? Very briefly. I have a ton of questions.
Colorado is a very strong economy. We have a very high level of small business ownership and entrepreneurial spirit, and I would say that our level of small business startups and growth is very high.
Thank you. Ms. Martinez?
Yeah, California is also a very strong economy, and we do see a lot of businesses starting. And I think one of the challenges we see definitely is the access to capital and obviously to the business consulting. But we do see also an interesting rise in small businesses, very small businesses, and also some of the freelancers and contractors.
Thank you. Ms. Jallow?
In Portland, there's a lot of immigrant businesses starting in Portland. Like in the whole of Forest Avenue, there's an avenue in Forest Avenue that's mostly immigrant businesses, and then they're having a lot of help from CEI, because when I wanted to start my business, I went to one lady who had a business and then recommend CEI for me. So that's the way we started, and that's a lot of us starting.
So, well, I'm going to have a follow-up question for you. Ms. Richards?
Michigan has a shifting economy with the changes in the automotive industry.
Could you use the microphone?
Michigan has a shifting economy with the changes in the automotive industry, but actually 3/4 of Michigan is small cities and rural, and so there's still a great deal of struggle for enough sufficient support for small businesses. But actually, we have 87% of all the businesses in Michigan have 5 employees or less. So that is a bread and butter of our state.
That's awesome. So I'm sure you all looked at our backgrounds, our bios. I've been a small business owner for 34 years. Never ran for office before I came here, but I ran on one principle, and that was getting out of the way of job creators, let them create more jobs and put people to work. And one of the biggest problems we have in America is we have people with great ideas like Ms. Jallow that are having tried to find opportunities to get access to capital so they can start. Also along that lines, I'm also in banking in a sense that I got to help start a bank many years ago. One of my frustrations was, and I'm sure you all have heard of the infamous 2 words, Dodd-Frank. And Dodd-Frank really destroyed the ability for the small community banks to come out and take a chance on people like Ms. Jallow. And so I'm sure you all have seen a lift in your opportunities. But as Ms. Martinez said, you also have people who are taking advantage of this inability for community banks to provide access to capital. And so therefore, that's the byproduct of what we sometimes don't hear about, how when we get really engaged in Washington, D.C. in policy, that there are alternatives that happen, bad things happen. So with that, Ms. Richards, we often hear about small businesses. They don't have the idea or to be able to find like CEI like Ms. Jallow did. How are we supposed to find people with ideas like Ms. Jallow? How are we supposed to find folks like yourself?
Well, first of all, the internet is really critical. The Small Business Administration website has the list of the microlenders, or had. They're updating it currently. They use our website. The Small Business Development Center, another SBA resource partner, is a critical component. Last year, we received more referrals from the SBDC than any other source. We receive referrals from the banks and from former borrowers from our program also. The word is spread very widely, and the biggest issue is there's still some gaps with the microloan programs where they don't cover all the areas of a state. Just officially this month, the last 9 counties were given to a microlender, so finally Michigan is fully covered.
Ms. Jallow, how did you find CEI in my remaining 30 seconds?
Through a business owner in Portland where I used to go and buy groceries. So I was talking to her. I said, I want to start a grocery store. And then she's like, okay, I will give you an organization that helps me, that are working with me. And then I was like, okay, I want to get them. And then she gave me CEI, and then I contact John. If
I may, we heard testimony a lot in our committee about opportunities to loan money. It seems like one of our biggest issues is being able to get the message out to people with ideas, because we have a lot of programs but very little awareness on the entire program itself. Thank you.
You're welcome.
Thank you. The gentleman's time has expired and he yields back, and I agree wholeheartedly about wanting to make sure we can find ways to inform people about those programs, and that's something that the ranking member and I are committed to doing together. I wanted to recognize Representative Sharice Davids for 5 minutes.
Thank you, Chairman Kim. I'm Sharice Davids from Kansas. It's the Kansas City metro area. I got really excited. I'm going to say what I have here, but I got really excited about a couple of things that you all have said. You know, the reason I get so excited is because entrepreneurship is kind of baked into the DNA of the place that I represent and that I live in. And this concept of a entrepreneurial ecosystem and the ways that different enterprises can make use of programs and that sort of thing plays out, at least from what I've seen. There's an organization that I know of, a CDFI, which I love CDFIs, a CDFI called AltCap in the Kansas City area. They were only on the Missouri side. They're moving over to the Kansas side as well. And they have found different ways to collateralize some of the loans, and I know that's sometimes an issue, particularly for like artisans. They started a program called ArtCap that helps artists collateralize in different kind of ways than what we might see ordinarily, which I think is one of the great things about microlending and CDFIs. So I might come back to that, but I really got excited when you started talking about the relationship with the SBDCs, the Small Business Development Centers. Can you talk, and maybe this will be something that each of you could speak to for a moment, about how important it is either to build that relationship if it doesn't exist, or if it does, and maybe any others like the PTACs and community colleges. I know Johnson County Community College, where I went to school, has a small business development center. Can you talk a little bit about that?
Certainly. The Small Business Development Center's purpose is, in fact, to assist the growth our development of small businesses. And so they see us as a strategic partner. So as soon as they're meeting with someone who's going to need financing, they alert us so that if we have additional questions to ask or direction to give, we work at the very beginning stages with them. We also work with the PTACs in the area. And many of the community colleges have entrepreneurial tracks now, and they frequently ask us to come and speak to their class before they graduate so that they know about the resources available to them. Because startup capital is very difficult for banks to provide, and so alternative financing like the microloan programs are very critical.
For me, having the experience back home, to come over here and then to start is a huge difference, because the licensing, you know, the insurance and everything, whilst back home you can just start. But when I learned about CEI, they definitely helped me, because I was thinking that I can do it. After talking to people, I was thinking that I can do it. But after meeting with John and talking about it, I always get excited whenever I leave the office, because I'm like, okay, I can do it. Yeah, and then we have people that are working in there too, that are from different countries. Yeah. Thank you.
Well, from Cameo, we do believe that the only way that we are going to be supporting the entrepreneur is if we provide the resources in a comprehensive way. And I think the entrepreneurial ecosystem dimension is something that we are very interested in continue developing. The resources are available. There are the SBDCs, the WBCs. There are a lot of independent nonprofit organizations that are providing business counseling to the entrepreneurs, but we just need to be aware of these resources and building really strong networks where we share what programs are in existence and we determine what gaps are needed. It is important to be able to fulfill that need of the entrepreneur and find the right capital for them as well.
We work very closely with the SBDCs across our state in Colorado. In fact, some of our lending team will actually have office hours within the SBDC to talk specifically about financing, in particular our ability to help them. Most of our SBDCs do a very good job on classes, and we do refer businesses to them. Sometimes, and this addresses a little bit the 50-50 rule, sometimes they do have long waiting for their counselors, or their counselors might not be as attuned to the some of the populations that we serve. And so we would like to have more flexibility with our grants to do that pre-loan technical assistance, and then of course to follow them post-loan because we have the loan with them. And so that rule actually does play into this issue about SBDCs and what they do well and what we feel that we have the better opportunity to provide.
Thank you. I appreciate that. And I appreciate your time. And with that, I yield back.
Great. Thank you. I now want to recognize for 5 minutes Representative Radewagen from American Samoa.
Talofa and good morning. Thank you, Chairman Kim and Ranking Member Hearn, for holding this hearing, and I want to thank the panel for appearing today. Each of you has a fascinating story, and I'm just very interested in it. My main goal while serving on this committee is to see small business development in my home district of American Samoa, and it's my belief that microloans are the way forward for American Samoa. Now, I've seen the wonder of microloans in the neighboring independent nation of Samoa, which has been a great boon for their small businesses. And I actually went into their villages and talked with many of the small business owners. And interestingly enough, it turns out almost all of the ones who get microloans are women. So they've discovered, the people who administer the microloan program discovered that men are not really as good at paying their loans back on time. So women have a better chance at it, so whatever that means. But I have a few questions. I'd love to ask all of you questions, but Ms. Richards, because our time is so limited, when you're speaking with small businesses, what is the #1 issue they raise?
Well, truthfully, the #1 issue they raise is that they need capital. What we recognize is that what they need is capital, and usually they need assistance either with focused marketing strategy or operational excellence. They have business operations that are not successful. And so the biggest issue is getting them to understand that it's not just the money they need from us, it's the technical assistance and us to be a partner in their business growth.
So after assisting a small business, I presume the relationship you built with small business doesn't stop, correct?
It does not stop. They are much like children, and they never go away. They come back in a good way. And so truthfully, as they hit key milestones, whether that's moving to a new location, we had a company that went actually into manufacturing the product instead of importing it, that they'll come to us first to help strategize, create a financing plan, and to move it forward.
I see. So in your statement, you explained that 93% of all your loans are through SBA's Microloan Program. What is the makeup of the remaining 7% of loans?
The 7% is from investments from some foundations and some area banks that have key target areas that they want to invest money in.
So do you know on average how many hours of technical assistance you might supply to a single small business in a given year?
We tend to estimate about 15 hours of technical assistance. Now, that will include any preparation time that our counselor, business counselor, will be doing in preparation for that meeting.
So that would be 15 hours in a given year. Okay. Thank you, Mr. Chairman. I yield back.
Thank you. We're going to move forward, and I'd like to recognize Representative Crow from Colorado for 5 minutes.
Thank you, Mr. Chairman. Ms. Prinster, always good to see a fellow Coloradan in D.C. Thank you for coming and joining us here today. And to all of the witnesses, really appreciate your hard work and what you're doing for small businesses and your leadership in your communities. This is a general question, and I would invite all of you to respond to it. But I represent one of the most diverse districts in the country. There are over 140 languages spoken in my largest city. About 1 in 5 residents of my community were born outside of the United States. And one of the biggest issues that they face, and this tends to be a very entrepreneurial community, they start their own businesses, and one of the biggest issues they face is just the lack of transferability of credit. These are folks that owned businesses from where they came, but they come over here and they're coming with a blank slate. And it's very hard for them to access capital and to start businesses. And I'd love to hear your thoughts whether you've experienced that. Maybe starting with Ms. Jallo, and what are the ways we can address that?
Yes, for me at the starting, I had a capital to start, but in 2 years, I need some to start to add more inventory in the store, and then to renovate the salon for a full licensed salon, because right now we just do braiding, which some ladies like me rent and start their own businesses. Because what happened, when they come over, like, they can speak English, but having that opportunity there that they can rent from me and sit and do their hair braiding doesn't need much of English to do that. But definitely the loan helped me for me to now renovate and put a full hair stylist that I will be employing, and a makeup artist to do makeup. Yeah.
I'm familiar with your district, Representative Crow. This is one of the reasons why the microloan program is so important. We are very familiar with working with this type of situation. We don't, because we're a nonprofit, we see this as part of our mission to help immigrants, others, re-entering citizens, veterans who may not have a very deep credit history or a troubled credit history. We really see this as part of our mission to help get them to this place where they can establish a business and establish credit. We do report credit through an agency that works with Equifax and TransUnion that we report on a monthly basis, so it is a credit building function, and we see that as very important for those businesses that are trying to establish credit. But as far as making the loan in the first place, we have the flexibility to be able to look past that, look at their business plan, work with them. Again, pre-loan technical assistance would help us these are the kind of populations that really need that more dedicated hand-holding to be able to get to that place.
Well, among our members, we do have several of them that are providing alternative underwriting criteria when they are actually offering loans to specific populations, such as immigrants and refugees and people with credits that are very troubled. So considering that kind of alternative ways to provide the loan and assess the loan before doing it, and providing that pre-loan technical assistance is key to actually help them build the credit and actually access capital to grow their business. So we do believe that needs to be kind of a partnership, again, and with different organizations, and being able to, the microlenders, the SBDCs and WBCs, and all of them to really work between themselves to provide that pre-loan technical assistance, and also to consider for the lenders an alternative way of considering and assessing the loan before approving.
Thank you. Thank you. I yield back.
Thank you. I'd like to recognize for 5 minutes Representative Spano from Florida.
I have a defective microphone, so I'm just going to hold it. First of all, I want to thank the chairman and the ranking member for highlighting the need to make sure that small businesses are know what SBDC does. That's been a frustration for me in my community as well. I have a couple questions. I think the first maybe I'd like to direct to Ms. Richards, if I may. You suggest that the 155th rule should basically end, and essentially that that loan funds should be allocated according to state size, needs of the business community. I'd like for, if you would, just to drill down for me, maybe take 30 seconds, drill down. So would it just be an allocation, proportionate share based on the population of the states? And then as it relates to the business needs of the community, what would be the types of criteria that you think we should look at in order to better distribute these funds?
Some of those practices are in place. The SBA requires a pipeline for us to show a pipeline of loans, and that we're in good standing with the program before we can borrow. And I think those need to continue to stand in place. So I think that the criteria should hold that an intermediary has to show that they're in good standing, but that the funds should be available to the intermediaries who are able to effectively deploy them, because that's really a better indicator, I think, to Congress of how much funding is really needed if we take some of these caps off as to how effective we could be at microlending everywhere.
Okay, so in your opinion, the most important criteria would be the effectiveness of the intermediary rather than the population of the states or the specific business needs of the community.
That's right. That's right. We've become very well-powered machines at creating jobs and businesses.
Do you have any concern that that might negatively affect some of the states or the business needs of small business communities who just happen to be in a region that don't really have an effective intermediary?
There are so many great associations that support intermediaries at becoming best in class, and there are so many resources to incur those skills that I don't think that that's really the issue. More and more intermediaries are both emerging and growing, and I think that the real issue is that because of the way the funds are structured, they ensure that great opportunities cannot occur in two intermediaries in one state. Someone gets the bulk of the money and someone doesn't.
Okay. All right. Follow-up question. You had also mentioned about the 50-50 rule and how that really you guys really aren't in the best position to provide this technical assistance. And so, do you know what the rationale was, SBA's rationale in order, when they implemented this rule to begin with? What was their expectation or anticipation for intermediaries in terms of technical assistance? Why did they think it was important?
If I may answer that question, since I was around at the early stages myself, I think the rationale, which originally it was 25-75, 25 being for pre-loan, I think the rationale was that they wanted the intermediaries to support the businesses who had loans and to spend most of their time working with the borrowers that had an investment from the microlender, and so that I think was the main rationale, was to force us to put our focus on that. I think as the industry has grown, we've seen that there are such a variety of types of businesses, including what we were talking about with Mr. Crow, and that's everywhere too. But many businesses need a lot more hand-holding and intense work before they're ready for credit, and being able to support them in that.
And so what would you say, and you can answer that question to Ms. Richards as well, but I also wanted to interject there, what would be that you had mentioned that the processing the loan and working on the loan and getting ready for the loan is included in this category of technical assistance. What other types of technical assistance do intermediaries provide, if any, or is it just processing a loan?
It's absolutely not just processing a loan. Most of the work is really key, is what is going to make this business successful and this loan get paid back. And so sometimes it's helping people to get into new markets. We helped a woman who had a battery franchise get an industrial contract with a utility company, which allowed her to be able to grow at a great rate, use the expertise she has, and basically open up new markets. Our reach is much greater than their reach.
Just really quickly, do you have any concern that doing away with the 50-50 rule requiring any technical assistance at all would create a problem where intermediaries would not have really an interest to provide those resources?
Absolutely not. I think it was originally designed because the only benchmark they had is banking, and so banks inherently are not going to spend that kind of time up front cultivating those deals. That makes sense. That's a good business decision. But we're in a different category, and we need the flexibility to do what we need to do.
Thank you, Mr. Chairman.
Thank you. Moving on, I'd like to recognize Representative Delgado from New York for 5 minutes.
Thank you, Chairman. And thank you, all the witnesses, for taking the time to educate us today. It is important, this work. And I wanted to stress, as someone who represents upstate New York, New York 19, the home of over 27,000 small businesses, one of my priorities is to figure out how to increase capital for folks back home. And one of the things that I often hear from folks back home is that they don't feel like the federal government is helping to revitalize the economy in rural communities. And my district is very rural. They can't get loans, as we've discussed, to start their business. They don't even know where to start, as we've discussed. And they want to stay in the community, but there are so many hurdles for folks to overcome. So, Ms. Jallo, what I would like to hear from you is to elaborate more on your personal experience in trying to get a loan for your small business before you began working with an intermediary. What was that experience like?
Before I start working with them, I would not be able to start anything if it weren't them. Like, I would not know where to go in the first place, because I was thinking, like, the concept that I have that you can just come and start, like back home. Mm-hmm. But when I talk to people, they're like, oh, it's not that way. You have to do this and that. And then that's the time I contact CEI, which is really, really helpful. Like, whenever I need something, they're always there. Whenever I call, John is ready. Sometimes I will be even late. He will be like, it's okay. You can come, So it's really helpful for me. And then with I know a lot of people over there, too, that really get help from them.
And mm-hmm. Can you speak a little bit about how long it took before you were made aware of this option, and how'd you come to learn about it?
I learned about it with a business owner in Portland who is an immigrant from Cambodia. Mm-hmm. He's the one who told me about CEI. And then when I contact them, it took me like 5 days for them. When I called him, and they just told me we can set up an appointment. You can come in. So that's the time I went in and we talked about it, and it was really helpful, for me to start. And then I was like, yeah, I can do this.
Excellent. Thank you. And to anybody on the panel, happy to hear about your experiences working with rural businesses that have benefited from the microloan program and some of the challenges that are specific to rural communities when it comes to accessing capital.
Well, we do have a lot of rural businesses also that our members served in California. And I think the challenges are high, as you mentioned. There is not as many microlenders as they would like, but there are also alternative ways. So definitely they are currently, they have really strong ones, I might say. So the lenders that are there might be just one or two, but they're really strong. Mm-hmm. And then also they are considering alternative ways to reach them. So when we are talking about online lending, it's actually a good way to reach more rurals. It's just, it has to be the right way. So we want to make sure that when we are talking about lending and being able to optimize the process and make it faster and more accessible for our rural business owners especially, we are able to provide the right programs and loans. So we've been in Cameo actually supporting a lot of our members to get more online applications and just being able to connect with the members through online solutions. And I think that's a really good way to make sure that you reach to the right business owners without them having to travel so far or being able to really experience all the issues that they might have to find the right partner in the location.
Yeah, so on that point, broadband access would probably be important then.
Totally, absolutely.
Okay. Anybody else want to
say something? Colorado has many rural areas as well. Our primary service area is the Front Range, which is more the metropolitan and small city area. But one of the difficulties we have in reaching some of the rural communities is just our ability and our ability to fund that outreach. And we do try to create partnerships very frequently with SBDCs, economic development organizations within those communities to be able to get the referrals. We have an online application. I mean, there are ways that we can serve a business in a rural area without always having to be there, but it is important to have those connections. And I guess I would just also say that this outreach and visibility is really critical to this program. Once we're connected with a business, we can help them. So to the extent that pre-loan technical assistance, as we say, could be, that the outreach could be folded into that, because I think the awareness and education of our partners in other communities is really important part of making this program accessible to businesses across our state, including rural areas.
Great, thank you. I yield back.
Thank you. I'd like to move on to Representative Stauber from Minnesota. You're recognized for 5 minutes.
Thank you very much, Mr. Chair, and to the witnesses. I appreciate your comments. I just want to follow up a little bit on our ranking member Hearn's comments about Dodd-Frank and loaning to small businesses. However well-intentioned that was, I can tell you back home, it was devastating for our small local community lenders, and they're feeling it today. And so when we talk about access to capital, that was one of the, I think, the negative effects of that law. And so I think our goal is to allow this capital, allow our small lending institutions across rural America have the ability to have that capital ready and available when that entrepreneur comes in. And so I think that what I'm hearing back home is from our lending institutions, our community lending institutions, that was devastating for them. A third of their time, approximately a third of their time, making sure that they're following the government mandates in case they're audited or investigated, which doesn't seem right. Our lending institutions, you've all built trusting relations with the lending institutions. I think they're a big part of our economy. We've talked about broadband. I'm on the Transportation Infrastructure Committee as well. Broadband is important for rural America, rural Minnesota, northern Minnesota, where I represent. And so, Ms. Richards, you talk about the microloan program. It's currently operating with half of the number of the intermediaries that are allowed. So, in your opinion, how can we attract more intermediaries in that rural area of our countries? Because we know that once we work broadband in the rural areas, that's where our small businesses can relocate or start up. Can you just answer that question?
Well, first of all, the current regulations around the program, the 2575, really limit your ability. When you have a rural area, there's a significant amount of time of going to meet with people because you have to go see their business. You have to see what it looks like before you go and make the loan. So the upfront costs, the pre-loan costs, are so much higher. It helps that it was moved up to 50%, which gives us some more flexibility because we have some clients that we travel 2.5 hours or 3 hours to visit in rural areas. So the first is that 50-50 rule is really hampering many organizations from stepping up to the plate and becoming microlenders, community action agencies, other agencies that exist within the rural construct. Secondarily, I think that there are networks that are continuing to work and associations, AEO is an association, and others that are trying to identify organizations that can serve those communities. We see this movement as critical that every county in this country should be covered. And so that's why I was so proud that finally every county in Michigan is covered. There are 4 other microlenders, and we mentored every single one of them to get started. So part of it is we need to have a mentoring network of successful microloan programs that go in and mentor an organization, identified resource, to actually become a lender. Get the best practices out of the way right away.
And thank you for those comments. I would say that, excuse me, I'm fighting it. I would say that the testimony today, and I'm very privileged to be on the Small Business Committee. As a small business owner myself, what you're doing is vital to the startups and to the entrepreneurial spirit, because when somebody has a good idea, they're excited. The door's got to be open when they're ready. When they run into roadblocks and stumbling blocks, they're not going to pursue it, as you described. And I think we all can agree that when that entrepreneur comes knocking, that's where the excitement phase is. They've probably done a lot of research where you can assist them in getting or developing their small business, because I think each of you know, and everybody on this committee knows, small businesses are the engine of our economy. Main Street America depends on small businesses. So I appreciate all your efforts that you have put forth. And Mr. Chair, I yield back.
Thank you so much, and I just want to echo your sentiments there. That is certainly the focus of what we're trying to do on this subcommittee and this broader committee. And just in my short time here on Congress already, I've certainly seen this committee try to do everything we can to put aside any partisan differences and work together to be able to figure out how we can help small businesses and entrepreneurs. And the work that you're doing is really where the rubber hits the road. And that's where we need to be investing in and figuring out what we can do to make sure to help you do your jobs better and help small businesses grow. So I just appreciate that sentiment there at the end. Well, I think we have, that is the conclusion here of the questions. I just wanted to take a moment. Did you?
Well, I was just going to again say
please?
Thank you so much. I agree with my member, Mr. Staubers. What you all do is, you know, it goes thankless sometimes, but thank you so much for your relentless pursuit of trying to make this a better program.
Absolutely. We all share that sentiment. We're grateful for all of you coming out today. And we also just wanted to take a moment to just recognize how exciting it is that we have an all-woman panel to celebrate Women's History Month as well. So I just wanted to thank you for participating there. As we've heard today, there's a lot of good work the Microloan Program and its partners, intermediaries, are doing to enhance access to capital and entrepreneurial development for America's smallest businesses. In the 20-plus years the program has been in existence, it has grown significantly, and as we heard today, some of the rules governing the program have not kept up with its growth. I look forward to working with my colleagues on both sides of the aisle to find policy solutions that will thread the needle to provide the flexibility intermediaries need to continue funding and training America's entrepreneurs. I would ask unanimous consent that members have 5 legislative days to submit statements and supporting material for the record. Without objection, so ordered. And if there is no further business to come before the committee, we are adjourned. Thank you.